Good morning, everyone. Thank you guys so much for coming to today's live webinar. And if you couldn't come and you're watching this later on in the day, thank you guys so much for watching. As you guys know, we're coming to the close of the year. But before we do that, one thing I want to mention is that I don't know if you guys looked at this week's economic calendar, but we do have 4 central bank meetings / announcements this week. So it's going to make this week an interesting week, I believe, when it comes to trading. But we're still going to look at the markets. We're still going to execute our plan, how we look at the markets, how we interpret the markets. We're still going to pretty much do those same things. But one thing I wanted to mention before moving forward is that, you know, really around this time, the second week in December, is really when you should think about closing shop. Usually after the second week is when you should end for the year and just reassess your trading for the year. We'll definitely touch on that later on in a little bit. But for now, what we're going to do is look for some opportunities to trade the market or day trade the market. So right now, we're looking at the Euro CAD. And we're currently looking at the 1 hour chart, but I think Myra wants to mention something before we dive forward and move into this particular pair. No, you know what I was going to say is it really depends on how the month starts, but normally after the third closing session of the week, you usually want to see things taper down. Of course, we're moving into the half of the month, so really, the first half of the month you'll see trading activity, somewhat still present in the market, volume still present, but then after the latter half of the month, you'll see things starting to die down. So then, we're approaching that week, so that after this week, when we do get quadruple witching on Friday, OPEX, we should expect a draining of liquidity and activity in the market. Yeah. So yeah, I guess with that said, we can move forward and we can look at this particular pair right here, right in front of us. This is the Euro CAD, and we're currently looking at the 1 hour chart. And as you guys can see, it's pretty obvious what's taking place. We're currently in a bullish environment, but the market's been bullish for a while now. We've been making higher highs, higher lows, higher highs, higher lows, higher high, higher low. And we saw price stuck in consolidation for a period of time. It was pretty much consolidating or in this in period of indecision or balance. And then we saw price break to the upside. So then right now we see price testing this area of structure or, support. What was once resistance is becoming support. So there's a possibility we could see the buyers come in soon. But what I'm going to do, I'm just going to draw in this Fibonacci right here, from here to here. And we see that price is testing the 382, which has confluence with structure. Look left, structure leaves clues. So then we have that. Let me just draw in this zone, this area. Let me just do it really from here to here. This zone right here, this area is where we could expect the buyers to come in at. So, there's a possibility we could see price continue from here. But what we love to do is follow a set of rules. Just because it's hitting this area of structure does not mean that we should get in. So what I'm going to do is drop down to the 15-minute. And I want to look to see how things are forming. And as you guys can see on the 15-minute, we see that the 20 simple moving average is still sloping upwards. Let me go to the 10-minute, see how it's looking from there. Okay, so on the 10-minute, we see it starting to flat out. So we can use this time frame. But based on what we see here, we don't see what do we typically look for on the trigger time frame before we decide to execute our trade? Like, what do we have to see? I know we pulled back into this area of structure, but what do we need to see first before we decide to pull the trigger? I know Robert said 3 waves. Exactly. We need to see a 3-wave pullback. Well, that's what we typically want to see. That's part of our rule. That's part of our plan. We have to see a 3-wave pullback. In other words, we have to see a leg A, leg B, and a leg C extension down here. That's just something that we have as a part of our plan, because what we've noticed is that a good portion of the time price would give us that ABC pullback, that three-wave pullback into an area of structure or demand or supply. And then from there, that's when you should look for your opportunity to buy or sell. In this case, we're looking to buy. So then that's what we want to see. So then, we're going to sit on our hands a little bit and sort of wait for price to give us that three-wave pullback. So I believe it could happen maybe within the hour, who knows? But that's what we want to see. So yeah, even though it's testing this area of demand, we still want to see that. So what I'm going to do is also draw in a few levels to pay attention to. So right here we have this $1.44 level, and you guys know what type of level that is. If you want to chime in, you can if you want. But this is a key level. So we may see price respond to this level when it gets down here, but we'll see. So we have leg A. Price could be forming leg B right now, and we could see leg C soon. So then let me just draw this out right now. So we have a leg A, and let me just put it up a little bit, and have this. So yeah, it's all about just waiting for price to follow every detail of your particular plan. So with this right here, if price was to create the C leg from where it is now, we would typically want to see price come within this zone and then look for a potential buy somewhere within this zone. So we'll see what happens. But this is the Euro CAD. What I'm going to do, I'm going to come back to this pair, and we're just going to see what's going to happen. In the meanwhile, what we could do is just add a price alert right around here, and we could say Euro CAD. You say put the date December 12th, and say price testing PRZ on 10-minute. Look to buy on the 25. One thing I forgot to do also, even on this particular example, we forgot to look at the other higher time frames. So we're still going to keep this on here, but on the 1 hour, we know that it's bullish. On the 1 hour, it's pretty apparent. 4 hour is bullish. And do we see any structure to the left? No, not really. It's just straight empty space. And on the daily, it's bullish as well. So all three time frames support a bias to the upside. Therefore, we should look for opportunities to buy Euro CAD. We have no reason to sell as of yet. So what we're going to do is look for buys. So again, if price can come right into the zone, then that's when we want to look for our sales. So this is the Euro CAD, and yeah, we're looking for buys. Are there any questions about this particular setup before we move on? Remember, we want to see price come back down, retest this zone, this area, and then pop up from there. So that's what we're expecting or hoping. And it could happen, and it may not happen. We may not get the three-wave pullback, and that's okay. You're not going to be able to jump in and execute every trade. As long as you follow your plan meticulously and you don't deviate from something that you typically look for on every scenario, then you should get something similar to your back testing results. If you back tested the strategy and it gave you good results following a particular plan, then you should see something similar to that when it's all said and done. If you find out that your back testing results are much better than your actual live trading results, which Can happen. It'll be slightly better, your back testing results, than your actual live trading results due to the human margin of error. But if there's a huge gap between your back testing results and your live results, then that's when you need to really figure out what you're doing, because you're likely violating some of your rules. But all right, so then this is the Euro CAD. Are there any questions about this particular setup before we move forward? What I'm going to do, I'm going to do something else too, before I forget. Let me go to the 10-minute chart. I'm going to see when price hits the 78.6, because if price hits the 78.6, then that can be a bullish sign for us. So let me just put something right here at the 78.6. Well, no, let me not do that. Let me not do that, because it could test the 78.6 and then go back down. So let me not do that. All right, because in order for us to trade this like this, if the price hits the 78.6 and then you wait for the pullback to get in, it would have to break an area of supply. And right now, our main area of supply, based on what we're seeing now, is this zone right here. This is our zone or area of supply where we believe the sellers are positioned. So we don't see any violation of supply on the way up. This is the closest one. So there's a possibility we can see price come here, respect this line, and come all the way back down. There's that possibility. So let's just hold off on that for now. And let's just see what happens. All right. So going back to the 1 hour chart, since we don't have any questions about the Euro CAD, then what we can do next is move to something somewhat similar, CAD Swiss franc. And well, let me just do it from here, because I think, okay, so CAD Swiss franc, as you guys know, yeah, we actually looked at this pair on Friday. We were planning to sell right around here in this zone, in this area, because this was an area of hidden supply, you could say, on a smaller time frame. But during that announcement, price came up, almost tagged our alert, and then we saw price immediately sell off from there. But it made another attempt to come back, test the same area, didn't quite trigger our alert, and then it fell back down again. So then we're definitely in a bearish environment. We can see that price has been making lower lows. Of course, it was in this period of consolidation. Price broke to the downside. Now we had this correction and we have to sell off now. So, what we can expect is another sell opportunity because of momentum. So we see that the 1 hour is definitely bearish. Price is creating lower lows, lower highs. We see the 20 simple moving average sloping downwards. So what about the 4 hour? 4 hour, very much the same. Price making lower lows, lower highs. 20 SMA sloping downwards. And the daily is very similar. Daily also has a bearish bias as well. So yeah, this is quite interesting. We can expect another move to the downside. What I'm going to do is place a line at 68 level, the 68 cent institutional psychological level. And let's go to the 1 hour and let's plan our trade. So right now, what we're looking for a sell opportunity on CAD Swiss franc. What we can see right here is that price is somewhat testing this area of structure. Let me just clone this one right here, clone this and drag this down here. So we do have this area of structure that we have to pay attention to. But in the same way we did with the Euro CAD, we can do this with the CAD Swiss, drawing your Fibonacci retracement tool. And what we can see is that price is somewhat testing the 38.2, this area, this zone. but what we typically like to see is price come somewhere between the 38.2 and 50 at least. But we can see that it's touching this area. What we want to do right now is drop down to our trigger and see what is taking place. So let's go to the 10-minute, because I believe it's the same thing, same situation. And right here, we see that price is still trying to correct to the upside, which is quite different than the Euro CAD. It looked like the Euro CAD was trying to, you know, give us that impulse. But in this case, we see price wanting to continue its correction to the upside. So, yeah. And do we see a three-way pullback? Remember, we want to see a three-way pullback on our trigger time frame before we decide to execute our position. And as you guys can see, we don't. All we see is one leg, which is leg A. Then we need to see a leg B, which hasn't happened yet, and then a leg C. And we could probably get a deeper push in this zone before we look for your opportunity to sell on bearish confirmation. So yeah, we're still waiting for this to play out on the 1-hour chart. So, we'll see what happens. But, in this case, we do have some areas of interest. Remember what we said before. We have our first area of supply right here, and this is our second one. Our second one is up here. So we may see price push up into the zone right here. It may give us a dip or a pullback. You may see price pull back a little bit and then make another attempt to in this zone right here, where the second area of supply is right here. And then from there, we can see the sell-off. So that's just something for you guys to know and take note of, while you're executing these trades. And I think, well, I'm not sure if we see the same thing on Euro CAD. Let me see. Let me go right quick to Euro CAD. Yeah. Okay. Okay. Where we have first area of supply. Right here. And yeah, first area of demand. And yeah, the second would be right around here. Yep. And it already tested it. So we may make another attempt to retest this area before price pushes up. But it seems like this one is different. This one, we see Euro quite strong. This move right here is primarily driven by the Euro. So, yes, very, very interesting. But from here, we can modify this line if we wanted to. And we can adjust our alert, drag it up a little bit. I'll drag it up right there. All right. So, yeah, we'll see what happens. But, yeah, we need to see price give us that C leg on Euro CAD. But it looks like CAD Swiss is still in the middle of a corrective phase. Still in the middle of this corrective phase. So it's not giving us the this movement towards the lows like Euro CAD is. It's giving us a movement towards its highs, but we may want to stick with with the CAD Swiss franc, look for an opportunity to sell that. What it does tell us, what the Euro CAD does tell us, is that the bullish bias is very strong. Bullish momentum, the bullish sentiment is quite strong. So even if we do see a push to a break to the upside on Euro CAD, that just confirms that we're very much bullish. And yeah. All right. So let's move on. Since we've talked about the CAD Swiss franc, remember we want to look for a pullback sell. So again, we'll be waiting for price to correct into this zone, maybe correct a little bit deeper, and then we can expect that sell-off to take place. And possible target will be right around here, the 6,800 fib level. As a matter of fact, if you wanted to, you could take a 382 target. A 382 target and target the lows, right around here, 68.09, right around there. or 68.10. So, we'll see what happens. But yeah, this is the CAD Swiss franc. Let me see, get it down arrow, or yeah, right here. Or we could have just let me just delete this one. Let me just clone this one and drag this right here. All right, so yeah, right around here. We'll see what happens. All right, so yeah, this is the CAD Swiss franc. Let's do one more, and then we'll pass the mic over to Marvin, and he could talk about what's been happening fundamentally. So the next one, let's do this one right here. Is going to be a little challenging to know, but let's do euro yen. Euro yen, yeah. Well, we could do this euro yen. All right. So as you guys know, we were just looking at this pair anyways. We somewhat, I think this was on Friday, I'm not sure, but what we can see is that price was in consolidation and we had a nice break and push to the upside. So then now we're looking for an opportunity to buy this pair, and it's pretty interesting what's taking place because if you go to the other time frames, like I know we're bullish on the 1 hour, but if you jump up to the 4-hour chart, you can see that right now price looks like it wants to push past this area or zone of supply. You can see that we had supply right here with this area right here with this nice strong impulsive move to the downside. We saw sellers come in on multiple occasions. Every time it hit the zone, we saw the sellers come in. So let me just drag this. Every time it hit this zone right here, we saw the sellers come in. But you can see right now, it looks like we have a lot of momentum to the upside, and now prices testing these highs up here, which is really another area of supply as well, right around here. But there's a lot of momentum to the upside. And I think this is euro driven. This is primarily due to the euro. So what we want to do is stay on that side of the market. We want to look for opportunities to buy euro yen. Now we see that the 4-hour is very much bullish. So we got the 1 hour is bullish, 4 hours bullish, and the daily. How's the daily looking? The daily right now looks like it wants to reverse and become bullish, even though this day hasn't closed yet. It looks like it may want to close bullish. We don't know yet, but as of now, our bias and our sentiment is definitely bullish right now. So we need to look for opportunities to buy on a pullback in price. So if you were to trade this pair, where would you look for your buy opportunity at? Well, let me ask you guys that question. Like, where would you look? Let me delete all of this first because this could be somewhat confusing. But we're looking for an opportunity to buy this particular pair. So if you were looking for opportunities to buy, where would you buy it? Or what area? Like, you tell me, based on what you see with price and the candles and the chart, where would you look for your buy at? I'll give you guys a few seconds to chime in. If not, then I'll go right ahead and do it myself. But yeah. Okay. So I know Dan said 144.30, right around there. And yes, he is correct, right around this area. Because what do we have here? Yep, we have a hesitation candle. That's what Adam said. So yes, we do have that area right here, this hesitation candle, which is an area of hidden demand. This is what we call a hidden demand because we have this one red anomaly sandwiched between these green candles, these green bullish body candles. So then, this zone right here is definitely something to pay attention to. Jesse said the retest of 144.05. Yeah, that's another area as well. We do have that retest of that institutional area zone. And yeah, this is also an area of supply as well, or demand. So do this right here. This is an area of demand as well. So yes, we do have this zone as well. So we have two zones that we're looking for. We're looking for, of course, this hesitation, this area of hidden demand, which coincides to structure. Look left, structure leaves clues. And we also have that area right below. So I'm just going to drag this right here. So what I'm going to do, I'm just going to wait for price to come to me. I'm going to wait for price to at least come to this area right here. I'm not going to do anything. I'm not even going to drop down to a trigger until I see price correct down into this zone. And as soon as I see that, then that's when, I'm going to drop down to my trigger and look for an opportunity to buy. Because I believe if we draw in our Fibonacci from this low all the way to this high, this is right below the 50, which is at a discount level, or, it's right around 50, which is, the equilibrium. So, you're buying at a discount once it reaches that level or area, and it'll just be a good time to look for your buys. So, yeah, we want to wait for price to correct into this zone, and then from there look for an opportunity to buy on bullish confirmation. And what I'm going to do is add a price alert right here, add alert at 144.50. I guess 6 is okay. So yeah, we're just going to put the date, and we're going to say price is testing 1 hour, price testing 1 hour demand slash support, drop down to trigger, three-way pullback, look to buy on bull confirm. So we're going to look to buy on bullish confirmation once it reaches this particular zone right here. So again, we're going to look to buy, and where will we close our trade? Well, we can go to the 4-hour chart, and we have this area of supply as well. So we may want to close out right where price is now. We may just want to target the highs, but we do have this area right here that we have to pay attention to. We could see sellers come in right around here as well. So, and price is testing this area now, so for all we could see a rotation lower. But what we're going to do is look for an opportunity to buy, and we're just going to target this zone up here. We're not even going to shoot for extended targets, because we already know from price history, price responded, reacted to the zone, and there's no reason to rock the boat and try to look for an opportunity to exceed or for price to press higher, unless you take partial profit at the highs and then move your stop to break even. Because in all honesty, I do think price has exceeded its average daily range. Let's see, where's the day? Okay, so this is where our day starts. Let's go from here. We're going to drag this price range to drag it all the way up to the highs. Well, I don't know if it has, but it's at 131. And I believe it could be a little bit higher, the average daily range, than that. So, we definitely have room to push higher, because I think even on the daily chart, if we go to the daily, and if we expand this to the upside, we can see that, okay, around 150. Let me, for some reason, it's not showing up. So yeah, let me do that. Okay, yeah, around 149, 150, around that area. Because you can look to the left, you can see one ATR 14 RMA, that's in the upper left hand corner of this window. ATR 14 RMA, we see 1.495. That means 149 pips, or 149.5 pips. So then that's on average how far price travels. Therefore, we could see a potential expansion even beyond this area right here. But sometimes it's good just to close out at the highs because we know that price could be reversing soon because of it meeting its average daily range. And if you really want to know how far price travels on Mondays, you can go to Mataf. That's what we typically do. We go to Mataf. Let me close this. You go to Mataf, and I'll just do it from here. Let me see. Mataf, Forex volatility tool. And then from here, what we want to do is just do the most recent 4 weeks. Press enter. And from here, we want to see euro yen. Let's go to euro yen. So we can see on average price travels 138.7 pips on average per day. You can see that. And specifically on Mondays, it travels around an average of 161 pips. This is based on 4 weeks of data. So there's still room to go higher for this Monday. But if you look at it, it's already near 138.7 pips. So if we do buy, we may just want to play it safe and just target the highs and not try to shoot for extended targets since we're near that average daily range on average. But there's a possibility price can exceed that as well. So, we'll see what happens. But yeah, we're looking for an opportunity to buy. So if price pulls back into this area, we definitely want to look for the buyers to come in. And yeah, I'll just take this. You definitely want to look for the buyers to come in and help to push price higher. So that's what we want to see. So yeah, are there any questions about this particular setup before we move on? Let me drag this to 138 right there. If not, then I could definitely pass the mic over to Marvin, and he can talk about what he's seeing on his end when it comes to fundamentals and all that good stuff. I was going to see if there was any scalping opportunities, but we'll probably look for that later after this after Marvin talks about what's happening fundamentally. All right, so let me pass the mic over to Marvin, and he's going to share some information that you need to know. All right. So yeah, good morning everyone. Yeah, we're definitely approaching the close of this 2023 calendar year. And it has been quite an interesting year, a turbulent year with much volatility. We've had aggressive rate hikes from the Fed and even other central banks throughout the 2022 calendar year. So then that created some interesting market activity where we saw deep sell-offs in risk assets, repricing of equity markets, risk assets lower. And we did see a pickup in volatility as we began to see monetary policy or these higher interest rates start slowly making their way into the economy. But of course, we see that this is the last trading month of the year. And really, in the trading world, this is one of the last, you could say, high volume trading weeks of the year. Just like Melvin mentioned earlier, this is the third week, or we're about to approach the other side of December 15th by the end of this week. I think Friday is December 16th. So then after this week's trading activity, where this week is chopped full of macro data and macro events that's going to have a definite significant impact and how assets reposition themselves ahead of the new year. So then this is a key week, one of the most important weeks of the year. Because just like Melvin mentioned, we have 4 major central banks set to release their monetary policy statements for the year, their final monetary policy statements, and even their outlook on the economy, where they expect interest rates to go. They're going to be reporting on that, and those banks are the Federal Reserve, which would kickstart the central bank announcements. That'll be on Wednesday, and then we have on Thursday we have the ECB and the BOE, the Bank of England, and the European Central Bank. They'll be releasing their data, and then I think on Friday, or it could be on Thursday too. Like I kind of I can't believe I'm forgetting, but we do have the Swiss National Bank also releasing their monetary policy statement and interest rate decision, and all four major central banks are talking about hiking rates. Um, but they've also been talking about scaling back on the rate of rate hikes as we begin to see signs of inflation sort of pulling back and cooling a little bit, and then we see signs of some signs of slower growth showing up in certain aspects of the economic data. But there's so much to talk about there, and I could just go on and on and on and talk about that. But for this week, like I said, all eyes will be on what's to come out tomorrow. So then, really, for today, for Monday, price action is pretty calm. For today, it's kind of hard. Like Melvin said, is we haven't seen too many setups form, this session, simply because the markets are sort of how can I say, in this wait and see mode ahead of tomorrow's CPI data and ahead of the slew of central bank meetings that we have later on this week. But if we look at our sentiment indicators, or we look at, let's say, I'm gonna look at, well, let's just go to FinViz real quick, just to be quick with it. And I know Melvin already has this up right here, and let's just refresh this to see. Okay. So yeah, this is actually today's heat map, the current heat map at the moment. And as you can see right now, you can see that there's a difference between what US future equity future indices are showing. This is from the major benchmark, major indexes. There's a difference in a slight variation between those indexes and also the European stock or the European future indices. And there's a reason for that. Okay, so for the sake of time, I'm going to just stay here and try to explain everything. But like you see right now, US stock futures, the S&P E-mini futures, Dow E-mini futures, the Russell E-mini futures, they're all trading to the upside and in positive territory today as we see lower yields. For this session, we're seeing treasury yields pull in, which is indicative of a softening of inflation expectations as the market sort of prepares itself and position itself for US CPI on tomorrow. And of course, the forecast is for us to see a drop in US CPI, slight drop on a month-to-month basis in the rate of inflation from the CPI data. So then, of course, whenever we see signs of inflation softening, then this would signal to the Fed that what they have done with the rate hikes is sort of working to help reel in prices and maintain price stability and bring the inflation rate back to its target level of close to 2%. So then that would be a good sign, and that will also mean that we should see stocks rally to the upside just on that encouraging data. So then we have that on the US front, but for the European and Asian front, we saw European futures and DAX futures trade lower. And even when you look even to certain parts of the Asian market, except for the Nikkei futures, you see most of the Asian markets trading in negative territory for today, along with the European indices as well. And really, the reason for that is simply the market's really trying to play catch up from last Friday's late session sell off. We saw a huge sell off in US equities late session on Friday. So then the European traders need to play catch up, because you got to realize, since we're in a global economy, everything is correlated now. There's a positive correlation, or there's some type of corroboration or correlation between financial markets. So then when one leading, which the Wall Street is sort of like the driver of global markets to some degree. The US dollar is the world's reserve currency. So then we got the US dollar, we got US stocks trading one way on Friday, and then we're seeing something different on today, or we're seeing the European markets play catch up along with the Asian markets playing catch up for this Monday session as well. But what was also weighing on Asian and European markets was just reports coming out of China. Let me just pull this up real quick. Let's see. China, zero COVID. See, and you can see right here. Let me just read. Beijing easing zero COVID restrictions on transport to revive economy. Okay. Okay. Chinese. Wait, I'm trying to find. Beijing swings from anger over zero COVID to coping with infection. Okay. Well, okay. So then really what I wanted to touch on is how over the weekend there was a surge in COVID cases in, China, and pretty much what some were saying that the relaxing of some of the COVID restrictions gave way to the surge of infections. But I think China's going to wade through it and just, not adjust or not make any changes to what they agreed to and sort of removing a lot of those zero COVID restrictions. They're going to sort of stay, just kind of like keep things open, keep the economy open, and just stomach through it, just like the nations that did. They kept their economy open. Of course, they had that initial wave of infections, but then things eventually died down. So then, this news initially is what weighed on Asian markets, Chinese markets, along with them trying to play catch up to Friday's late session sell off, and even the sell off that happened from the PPI data on uh, on Friday. So then let me just touch on that right now, because lately we've been seeing some data come out that made it seem like inflation was sticky, and the interest rates weren't really working their way to sort of deal with services side inflation, shelter inflation. We began to see signs of inflation expectations in the University of Michigan Consumer Sentiment 5-year inflation expectations, 1-year inflation expectations. I think, well, I can't quite remember, but I think they picked up as well. So then, of course, there's reason to believe that there's a possibility that we may see tomorrow's CPI data outperform estimates and pick up as well. But for the most part, analysts are saying we should see a softening of inflation. We're seeing US break evens and just inflation gauges slide lower. Let me just go to this right quick. Our break evens right here. Let's do. This is our break even inflation rate. And you can see here that it's sliding lower as well. This is a 5-year break evens, which is really a measure of inflation expectations, like what the inflation rate will be in 5 years. And as you can see that it's sliding lower as well, along with US treasury yields. They're softening as well. So then, could this be an indication that things are unwinding? And should the Fed look to pivot soon or look to sort of scale back their pace of rate hikes? And we know that a few weeks ago, Fed Chair Jerome Powell did announce when he spoke at the Brookings Institution back at, I think it was November 30th. He pretty much signaled to the market that it's about time to see a softening of rate hikes, and there's still a strong case for a soft landing in the economy, more like a Goldilocks recession where we do see a little bit of job losses. We do see some higher rates come in and some demand destruction, but it's not too bad. It's enough for the economy to stomach through, and it's what's expected, and we'll get this soft landing in the market. But you know, right now, we're gonna see whether or not the market, like the moment the market doesn't believe the Fed. They don't believe the Fed. They believe that there's still a lot of inflation in the market and that there's still room to go with rates. But it's going to be interesting to see what this CPI data will say on tomorrow, because it may give sort of like the confirmation or a validation to the Fed that they're on the right track if those numbers do come in low. If we see a drop in CPI, or the inflation rate, um, that can be a good indicator to the market that the Fed has been doing their job, and they've been helping to maintain price stability, even at the expense of what could be future job losses later on. So, so yeah, so then we got a lot that the market will be focusing on this week. The first set of data will be the CPI numbers, and then after that, we have a slew of other data prints. We have US retail sales on Thursday, and then we have the central bank meetings throughout this week. But you can see here on this heat map that um, of course, crude oil, is starting to pick up. You know, gold and silver and a lot of our precious metals are selling off for the session, which is interesting because we're seeing some dollar weakness in the market, but yet we're seeing gold sell off as well. So then this could just be, um, I don't know, a measurement of a drop in demand. This could be signaling some type of demand destruction or slower growth in the economy, especially if we see copper, Dr. Copper, selling off as well. But we're seeing our metals, precious metals, industrial metals sell off. It's interesting because crude oil was negative for today, but now we're seeing it move back up into positive territory. So then that's a good sign for that. As we saw on last week, we saw oil move into contango territory. Let me just do this real quick so you guys could see this right here. Now, this is the spread. Like, this is how you can measure sort of what could happen in a more broader term with crude oil prices. And what I have right now in front of you is just a spread chart. It's a chart of the February contract for light crude uh, in comparison or versus the current contract. It's the spread between the February contract and the current 30-day contract of light crude WTI crude oil. And based on what that spread is or where that spread is, that would determine if we're in a period of contango or if we're in a period of backwardation. And right now, since this red line is sort of is what divides contango from backwardation. You can see that oil markets currently at the moment is in a period of contango, which means that more of our deferred crude oil contracts or more of the longer term further out crude oil contracts are actually more expensive than your 30-day or your near term current price of oil. So then, normally when the markets or when oil markets are in contango or when even commodities, because we can still do these type of spread evaluations, we can still look at wheat to see if there's, contango or backwardation in certain other commodities. But you can see here that for the February contract, it's more expensive than the current contract. And if we go to let's see this is the June contract. This is the June contract versus the current contract, and you can see that it's still above zero, which means that the June contract is more expensive and it's in a contango. So then what this signals to the market, when we see certain aspects of the crude oil, the spread, certain segments of that yield curve and crude oil move into contango, then that can signal a deeper sell-off in oil prices. So then if we see more aspects of the oil curve move into contango or start, steepening and moving into positive territory, then this can indicate that there's still a further leg to go lower in oil prices, and the sell-off in oil is not yet over. Even though we're getting a period of relief, there's still an argument or a case building for a deeper sell-off in crude oil. And if we go to our oil chart here, you could see right here that oil right now, it's a negative day actually. It's trading at 71.47, but it can possibly go all the way down to $60 a barrel, $65 a barrel, and find support there. I'm thinking, I don't know when the last time it was there. The last time it's been in this area that it's trading at now is in December of 2021. So so yeah, we see this fresh area of demand right here. Let me just draw this in right here. So there's a possibility if the market wants to honor the technicals, then we could see oil move into this territory. It seems like it could be testing it now. So there is a case for it to move and bounce higher, but it could also slide lower and deeper into this area of demand, around the 67, $68 level, and then start rotating higher from there. But as long as it's in contango, we may see deeper lower oil prices. Right now, it's barely breached contango, so there's still a case for it to go back into backwardation and us to see oil prices rally, on that. So then, but yeah, so for today's market, I would just say just follow the technicals because a lot of the price action is not going to make sense for today. We know that this is Monday. This is traditionally a low volume day. So we don't really get strong signals and that volatility that's expected to push asset prices, further into their trends on Monday. But like we said, December is an unusual month. It's the last trading month of the year. And typically the price action is unusual simply because you have hedge funds preparing for next year. They're reallocating their books. They're reassessing where they want to position themselves for the new year. So they're forward looking into next year. Most of our hedge funds are already in 2023. So then you have that. You also have traders for tax season. There's tax loss harvesting or tax loss selling where they try to find a way to minimize the amount of taxes they have to pay. So then they end up selling some of their loser stocks in order for that loss and investment income to be factored in to the amount that they would have to pay in taxes, and that can minimize or lower the taxes they would have to pay on their capital gains. There's capital gains tax, and of course, traders will find ways to sort of minimize the amount they have to pay in capital gains. So then that's going to go on this month where you're going to see some unusual selling of certain stocks, dumping of certain stocks ahead of the new year. But this is all going to happen ahead of even the final weeks of the year because as liquidity dies down in that low liquidity environment, we get that Santa Claus rally, which starts like about 2 days before Christmas, 2 to 3 days before Christmas, and ends about 3 to 5 days after the New Year's. You get that end of the year rally in US equities, has on thinner volume as traders just look for opportunities to buy assets in a low liquidity environment, and just go and buy ahead of the new year. So then we typically see that towards the end of the year. There's no guarantee we'll get a Santa Claus rally. We know that we're in a different set of circumstances in the economy where central banks are hiking rates. So we may not get that Santa Claus rally that we usually get during certain, after, in December, towards that last trading week or right before the Christmas holiday. So then there's no guarantee we'll get that. But this week it's going to be pretty interesting. We have quadruple witching at the end of the week, which means that for certain stocks within the stock market in general, we'll see a constraining of volatility ahead of Friday OPEX, where we get four classes of assets that are set to expire on Friday. So then, since we get all four classes of assets expiring, that's going to definitely provide a surge in volatility on Friday ahead of the close. And it's going to make for some interesting trading then. But this week is an important week. After this week, we expect things to die down. We expect the holiday malaise to come in. Traders go on vacation and start preparing for the Christmas season, and we'll see that thinning of liquidity after this week, as we go ahead into the Christmas season and then the New Year's season. But it doesn't mean that there won't be trading opportunities. It just means that there'll be a lower volume than what we usually see. But but that's pretty much it. I don't know if Melvin has anything else to share. I'm going to turn the mic back over to him. Well, first, let me just go over Forex right here. This heat map. You can see that for the Forex, we see Euro is leading for today, which is quite interesting. Euro is leading for today, followed by the pound. We had a slew of data coming out of the UK, GDP data, trade balance data, industrial production, manufacturing production that all came out. pretty solid and outperformed the market expectations. I think only one of them maybe underperformed, but this is providing some support for the pound or the sterling. And then we see the Swiss franc also strong for today as well. But the weakest currencies is the CAD and the Aussie, which are commodity linked. And it's really interesting because typically on days where we see a little bit of risk appetite, we see the commodity linked currencies also trading higher since they're high beta risk sensitive assets. So then this is what's typical of Monday. You get those market distortions on Monday that don't quite make sense. But on days like today where markets are really waiting for the tomorrow's data and waiting for Wednesday's Fed statement, it's just important just to trade the technicals, trade price action, trade what you see, not what you forecast on a macro basis, but just look at price action and base your trades around technical levels of support and resistance. But let's go to the crypto heat map. And the crypto heat map, this heat map is saying that it's somewhat neutral. We see Bitcoin Cash and Litecoin leading for the session, followed by sell off in US dollar and Ripple. This is interesting because Ripple opened the session during the Asian markets. It was definitely rallying to the upside or spiking to the upside. So it's interesting to see that Ripple is now on the lower end of the spectrum. But yeah, so then that's that for my news for today. Let's go to Forex Factory real quick. I think that's it. Like, I don't know what else to cover for today that you guys would need to know. But yeah, this is all the data from Britain that came out that gave a strong performance. Let's go down. We don't really have much on the US docket for today. No high tier data except for Bank of Canada and Governor McClain speaks. Right now, we're still in that Fed blackout period. So we're not going to hear from any Fed member until after Wednesday. So then, we're not going to have any of their statements influence price action ahead of Friday's announcement. But we don't really have much. We do have this 10-year bond auction, which I'll be paying attention to. And I know one of these days I'm going to have to do a session on how to read the bond auction data, how to look at the tail to see what the tail is, and how to look at that to sort of forecast or show a measure of demand, what markets are, how markets view the health of the U.S. economy. So then this bond auction is just really an indicator of how investors see the U.S. Economy, whether it's a strong place to invest, and whether the bond market is healthy. So then, one of these days I'll do a session on that, on how to look at the bid to cover and what was the final yield on the announcement, and that can all be a measure, of demand. When you look at the data. But yeah, that's coming out, but that's a low tier, low priority report. We don't have much coming out for this session. Even the Asian session, there's not much coming out. Everyone's waiting on tomorrow, that the US CPI data. So yeah, that's pretty much it. So then what I'm going to do right now, I'm going to turn the mic back over to Melvin, and he's going to continue talking for the rest of the session. Yeah. All right. So what I'm going to do is go over a few setups. I definitely want to touch on the NASDAQ. I know I haven't touched on that in a while. Definitely want to show you what I think is going to happen from a top-down perspective, and then you can decide how you want to trade it. Of course, once you get a bias or directionality, you can choose to even scalp in that direction where we feel price may go. But I want to definitely talk about that, and I want to talk about another pair. But with that said, while I'm here, let me touch on something that I do believe we talked about on Friday. I don't know if we talked about this during the webinar or on the war room, but let's go to US dollar, Japanese yen. I'm just going to make this pretty quick. Yeah, we did talk about this, I think, during the war room. And we were planning to enter a long, but of course price smashed through our area of support or demand, and we decided not to enter that trade. So let me just delete this for now. All right. But looking at this chart, you can see that we sort of predicted what was going to happen. We mentioned that price was going to pull back and we are going to see a continuation higher to retest this area of supply. Let me just draw this in right now while I see it. And let me just change the color. It's this area of supply right here. So let me just make this, I'll just change the color to this. But yeah, that's what we were expecting. We were expecting price to push up and then price corrected. And we knew that it was having a difficult time breaking to the downside. So, my assumption was, hey, we're going to make another retest of this zone, this area before we see this true sellers come in. So then what we see potentially forming is a what? What type of pullback will this be? What is this called? This type of pullback where, you get that type of behavior where you see price come up, boom, boom, and then make another leg higher. What is that typically called? I know Jesse said double top, and I mean it can that three waves, exactly, yeah, a three-wave pullback. But what is that pullback called? Is it a simple pullback or a complex pullback? Let me ask you guys that. Is it a simple or a complex? This is probably for those who's been with us for a while. Remember, simple is when you have a simple pullback. Like this one right here is a simple pullback, the one above, where you have this impulse and then you have this very simple, smooth pullback, and then price pushes down. That's what we call a simple pullback. So whenever you see something similar, yeah, okay, Adam said complex, exactly. Because whenever you see something like this where a simple pullback isn't really simple, it's not simple. You have this pullback and then price comes down. It fakes a lot of traders out. It induces a lot of traders to sell. And then from there, we see another attempt. This is what we call a complex pullback because it's not simple, it's complex. It's more harder to read and really figure out in advance what's going to happen because this, like, even let me just, I'm just going to delete these drawings. But let's just assume that, we were trading this in real time and all we had was this information right here, right? We would think that, hey, as soon as price reaches this zone, this area, this is where we should look to sell, right? We'll be paying attention to this, right? So, of course, price comes in, we move forward, price tests our area. Right then and there, we're looking for an opportunity to sell. So we may drop down to something like the 4-hour, look for that bearish confirmation, and then decide to get in on a sell. We'll wait for price to, well, we don't have the third leg yet, so that'll keep us from actually going in. But let's assume that we're looking to sell. In this case, we'll be waiting for price to break this low. So we'll be waiting for that. So price pushes down and it doesn't really, okay, it breaks our low right there. It breaks, well, not really. It doesn't break it. So yeah, we're still somewhat, we would have been protected. We would have been safe because in this case, it didn't really break the low. But you can see how in some cases others would have looked to sell and they probably would have been stopped out at break even or stopped out, period. So this is what we call a complex pullback. And in this case, since we're on a 4-hour chart, we might as well talk about what's happening now. So then this is what we see. We see the leg A, this is leg B, and we can expect another leg C expansion up into this area, this zone, before we consider actually trading this pair. And it could go even higher. Because remember what we mentioned before. We typically want to see price get to that second area of supply because from here we can see that price broke above this first area of supply right here with this indecision candle. And then we saw a nice break to the downside. This is our first area of supply. Typically price will go to this second area, and the second area represents this entire area of consolidation right here, usually the midpoint. But you can assume that price can go somewhere within this zone, this area right here, this whole entire zone, and then we can see the sellers come in and push price to the downside. So that's what I think could potentially happen. If that does happen, then we can just definitely draw it out. We can say, hey, we're expecting price to potentially create this leg C expansion to the upside, which would take us to the highs of this zone. But we can also do our 382 measure move, drawing our Fibonacci of this entire A leg or A move. Take the arrow from the 100 to the 38.2 Fibonacci, drag that right here to this area. So then now we know somewhere within this zone is where price could potentially go, right around here. So what we can do now that we have an area of projection where we feel price could go, what we can do is look for a potential buy opportunity. So right now we're looking at the 4-hour chart, and we can see that price gave us a correction on the 4-hour. We were in a bullish environment. Price broke above this high, created a bullish environment, and what do we see? We see another complex correction to the downside, leg A, leg B, leg C. So then now we're looking to buy on this push to the upside. So what we're going to do is drop down to a smaller time frame. Let's see how things look on the 1-hour or even the 30-minute, because the 1-hour is pretty much already bullish. 1-hour is already bullish. We're seeing price react to this area because of this consolidation, this zone of supply. So I'm thinking price is going to form what? We have boom, 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 and so in other words, what is this called? This is called the infamous inverted head and shoulders pattern, or reverse head and shoulders. That is what I think is going to happen. I think we're going to get a deeper pullback into this zone in this area, and then we should see the buyers come in. So then we have to look to the left, look to see where areas of demand are, and we see that we have an area of demand right around here. This is where we had a huge surge of buying, price action come in, create this break to the upside. So then what we can assume is that in this zone right here, from here to here, is where we could see price go and where we could look for an opportunity to buy. Somewhere right around here. But of course it's risky. If you really want to play it safe, you can wait for price to break the highs, but even then we're not too far away from the zone. So what we can do is just simply look for price to come down into this area and then look for a buy. Or, well, let me just keep it like that because I don't want to risk it too much, because if you go down to a smaller time frame, even on the 30-minute, we can see that price is it gave us this reversal setup. We do see a 3-wave pullback even on the 30-minute, leg A, leg B, leg C. Price broke above the highs. Now we're seeing a correction. Where we're seeing a correction to sort of to well, I wouldn't say this is an area of demand yet. So but yeah, so yeah, this is all interesting right now. But if you really want to play it safe, just wait for price to come all the way down here first, and then look for your opportunity to buy. But there is a possibility that we could see price reverse right now, mainly due to the fact that it gave us this 3-leg pullback. You see a break to the upside, price pullback to this area of structure, and there's a possibility we could see the buyers come in now, or right around here. So we'll see what happens. Price may give us a correction to this zone. Let's just do this. This is what I want to do. Let me just delete this right now. This is what I want to do for US dollar Japanese yen. If we see price test this zone right here, then that's when I'm going to drop down to something like the 5 minute and look for, bullish confirmation. So if we do get that bullish confirmation in this area, if we do see bullish confirmation on the 5 minute, then I'll look for a buy um, right in this area. That's if price comes down and tests this area, we'll look for bullish confirmation. However, there's also the possibility that we could see price expand lower to the downside. So yeah, either price will touch this zone, push up higher from here, or we can get a deeper correction. And if we do see a deeper correction, just wait for that bottoming to take place. And you can wait for it to happen on the 30-minute before you actually execute your buy. So yeah, that's pretty much it. That's all that I have for US dollar Japanese yen. We're looking for a buy opportunity first before we look for the real sellers to come in all the way up here in this zone. So, we'll see what happens. But yeah. So what I can do is place a price alert right around here and look for that type of price action to form before we decide to get involved. So let me just do that now. Let me place one right here, add alert. Price testing 30-minute structure / demand. Look to buy on bull, confirm on 5-minute. All right. Let me put the date 12/12. All right. So yeah, this is what we're looking for right now on US dollar Japanese yen. We'll see what happens. There's no guarantees, but we'll be looking for a buy either in this first zone or a buy down here in this second area. So, we'll see. All right. So if there aren't any more questions, what we can do from here, we could actually move to our next pair, which is the NASDAQ. So let's do that right now. Let's move. Well, before I do that, let me go to the 5-minute, see how the 5-minute's looking on here. Okay, the 5-minute doesn't have really a 3-leg pullback yet. It just has one leg A. So we could see a leg B form soon, and then another leg C deeper in the zone. All right. With that said, let's look at the NASDAQ. Let's go to the daily. And we can do, well, yeah, you can, all right. Yeah, so then for those who want to know, the NASDAQ, you can trade QQQ, NQ1, the futures form of it. You can do the CFD version, US 100, NDQ or NDX is the CFD version of it. But they're all showing the same price action. So this is the NASDAQ. And right now we're currently looking at the 1-hour chart. So as you guys can see, right, we see that price consolidated right here, created this bullish breakout to the upside. But ever since then, we've been in a period of consolidation. It's been kind of hard to really read what the NASDAQ is doing. But what we can clearly see here is that right now, price is testing an area of daily structure right around here. We see price testing this area of daily structure support. And, we could see price correct a little bit. We see price testing this daily structure support. Daily stochastics is also oversold, which means that there's a possibility we could see some sort of reversal or correction to the upside. And I do believe we're going to see a correction. This is what I think. Before we drop down, we're going to see a correction, likely up to this green zone right here. And then we're going to see price potentially sell off, potentially. There's no guarantee, but what we have right now is a bias to the upside. Now, let me explain why. So right here, we see that price is, extending lower. It expanded into this area. Now we're in the middle of a correction or a bounce to the upside. Because every time it hit this area, we saw a nice bounce. We can expect a decent bounce again. So going down to the 4-hour chart, what we can see here is what? We can see that price pushed up to the upside, corrected, and we may get another expansion to the upside. In other words, what we're seeing is a 4-hour reversal, which is creating a potential 3-wave pullback, a leg A, a leg B, and a leg C. Now, is there a possibility for price to expand lower and retest the lows down here? Yes, there is. There's that possibility. But, I'm thinking that it should get a deeper correction or expansion, because every time price came down to the zone, we saw a nice, decent move. We saw a nice, decent move. So we like, of course, if you look at this last move, well, right here we see price test this area, come back, corrected, came back to retest it, and then we saw the explosive move. We could see something similar to that even now, but this is what I think is happening. I think we could be forming something like a C leg all the way up into this zone right here, where we have supply. And if you look historically, we have not just the first zone, but remember, price is typically attracted to the second zone of supply or resistance. So I'm thinking that we could see price push up into this area right here. And if that is the case, then we can plan for that. We can say, hey, we're going to look for price to correct somewhere into this zone. Just like with the US dollar, Japanese yen, quite similar. So we're going to do this right quick and see where price can go. So yeah, price can actually come and retest the highs right here. So let me do that right quick. Draw this in right here. So then we have this zone where price can actually go up to in this area. So if that's the case, if we have a bias to the upside, then how should we trade it? So then we know that on a 4-hour, we see this pullback. There's a possibility we could see another expansion to the upside. What we want to do next is drop down to a smaller time frame, either the 1-hour or 30-minute chart, to really see what's going on. So because we're expecting maybe another expansion up into this area. It's a possibility, or even this zone right here. So then what we're going to do is drop down to the 1-hour chart. We can see that the 20 SMA on the 4-hour is beginning to flatten out and slope to the upside slightly, which means that there is a bullish environment potentially forming. Now, if we can see the 1-hour form somewhat of a bullish environment, then that'll be great. So go down to the 1-hour. Okay, so let me ask you guys this question. Does the 1-hour have a bullish environment? Yes or no? Does the 1-hour have a bullish environment? Yes or no? Okay. No, not yet. Like, remember, what we want to see in order to prove that it's a bullish environment, we need to see the 20 simple moving average start sloping to the upside. Sloping to the upside. Like in this rally to the upside initially, 20 SMA was sloping to the upside and price was above it. So in this case, we see the 20 simple moving average sloping downwards. Price is above it, but it's still sloping downwards, which means we need to see it start flattening out and curling up before we can assume that we're in a bullish environment. So then what I want to do, or what we can expect price to maybe make another move to the downside before we see a push up. And if we see a push up, we need to see a break of these highs right here before we consider buying. So before we consider buying, we need to see price break this potential high on a retest of this low, this area, because we see all this indecision right here. I don't know if you guys can see it. These indecision candles, right around here. This is where I think price is going to fall down to this area right here, and we could see some demand come in. But let's see, do we have history explaining where demand can come in? Well, we could see demand come in, right around here. Let me just draw the different areas. So we have this hesitation candle right around here, and right around here. But in either case, you need to see another attempt to tag these lows down here before we see price rotate to the upside. And what we want to see is a break of this level to the upside. Once we see a break of it, that's if we get the retest. If we see a break of this level, then we can be more confident in looking for a buy. We'll wait for price to correct to the downside to an area of demand, and then from there we'll look to buy, and you can target the highs right around here just to play it safe. But it looks like price may be wanting to sell off from here. So then as of now, you can just look for an opportunity to sell scalp this move to the downside until it reaches these zones, and then wait to see what's going to happen. So going on a 5-minute chart, what we can see is that we're in a bearish environment on a 5-minute. If you're looking to sell, just simply wait for price to come into this area right here, this supply zone right here, the most recent one, and you'll look to sell. It's just that simple. So look to sell, and then you can sell all the way down here. So wait for the pullback and down. Yeah, but the market is about to open in about 3 minutes, so we'll get more clarity on what's going to happen as soon as that takes place. But we do see a lot of bearish, strong bearish bias on the 5-minute right now with this candle. It doesn't mean it's going to stay there, because at the open, anything can happen. But what we're assuming is that we could potentially scalp this move to the downside by waiting for a correction in price. Now, we do have price approaching this area of demand right here, so that's something for us to also be mindful of on a 5-minute. We see this area of demand right here, so it's a possibility that price could tag this area, and we could see more buyers come in from this area. So we'll see what happens, or we could see the correction begin right here. So yep. But yeah, this is the NASDAQ. Overall, we're expecting price to go all the way up to this zone up here. So it's a matter of just waiting for certain things to align first before we pull the trigger in that direction. Right now, the 5-minute is looking bearish. 15-minute, well, looking somewhat bearish. I think at the close of this candle, we'll get a bearish environment. And on the 1 hour, we're still somewhat looking bearish, because even though price is above it, 20 SMA is still sloping down. So yep, we're somewhat bearish. So yeah, we'll see what happens. We'll see what happens. Hopefully we can get a retest of these lows, and then from there we'll just wait for price to break this neck, or you can front run the move, look for a buy opportunity early, and then get involved in the trade. It's just that simple, really. It really is. But yeah. So let me do this before I forget. Let me do this, and let me add this, because after the break, you want to wait for the pullback, and then we want to ride this wave to the upside. And for all you know, we can actually hit this second area of supply, because this is where liquidity is. This is where the orders are. So oftentimes price wants to go to where the orders are. It'll go from supply. It'll go from demand, from area of demand into an area of supply, and then from an area of supply to an area of demand. That's how price typically moves on most occasions. So, we're expecting that to happen. So in this case, we're expecting price to get to an area of demand. Where is the nearest area of demand? Right here in this area. So price I think it's going to slide lower, gather more orders, gather more liquidity, and push up. We'll see price push up from there. So yeah, but this is what we're looking for on the NASDAQ, QQQ, NQ1, US 100. That's what we're looking for, this type of potential price action to form. So we'll see what happens. But yeah, it looks like price is reacting to this zone right here. And I think we are at the open. The market has opened. So of course, it may be wise to wait somewhat because we could see price start reversing now. But let's see if this area will hold. Let's see. Sometimes it's good just to sit and just watch to see what price will do. You don't have to do anything. Just sit on your hands and just wait. Usually, I like to wait a few minutes after the open. So, yeah. Yep. But are there any questions? I'm getting a little bit tired. Was up late last night. Are there any questions? You can see here that this area is holding. This area is holding as a resistance. And then you could tell that's where the orders were. You see that? That's why it's important to identify these areas of supply and demand. Identify where the orders are, identify where the sellers are and where the buyers are. That's really the majority of the battle. That's like 70% of the battle, is to identify where the orders are positioned or where there could be imbalance. Because what we see right here, this is an area of imbalance. Price was in balance with this consolidation. Then we had a nice strong break to the downside. Now this zone becomes the area of imbalance, and we look for price to go there. So yeah, you would have had a pending order here. You would have been triggered, and we probably would have been closed out right now because we would have been targeting the lows or this area of demand right here, because it's pretty obvious price was in a period of balance. And then right here we saw price in a period of balance and then imbalance. So right around this area is where there's imbalance. You're going to see buyers come in. You can see price push up higher again from there, just like what we're seeing right now. So, yep. All right. But yeah, that's pretty much it for the NASDAQ. We just have to wait to see what's going to happen. And then from there, we could make our decision. Now, if price does break above this high on the 1 hour, then we can look for a potential buy. So we do see a break above it. We'll look for a potential buy on a pullback or dip in price. Well, I know it's kind of hard to see, but we do see an area of imbalance or a supply area right here. So if price breaks, we could see resistance right around this area, and then we see price correct to the downside. So let me just draw that in. Yep, right around there. You could see price break, find resistance here, correct, and then look for that opportunity to buy. All right. So yeah. All right. So are there any questions about anything we mentioned on today? Going once, going twice. Okay. I guess one thing I can do right now, I know something that I haven't done in a while is, go over an example of trading a pullback. I haven't done this. I wasn't planning on doing this, but let me just do this right now from where we're at right here. So based on what on a 1 hour chart, we see this strong move to the downside. I know we have this area right here from before. Let me just remove this because we don't really need it. Move this stuff right here. So right here, we have a strong move to the downside, but we have an area of supply right here with this indecision. This hesitation candle is an area of supply. So then what I would typically do is wait for price to get somewhere near this area of supply, and then I'll drop down to the trigger time frame and look for an opportunity to sell. So let's see what happens. So we have this reaction. Okay, so maybe like right around here, that's when I'm going to look for drop down to my trigger time frame, because we're almost near the zone of supply where the seller's going to come in at. So then from here on a 1 hour, where do we drop down for our trigger time frame? We would drop down to what? To what time frame we would drop down to? I'll let you guys chime in. But yes, we definitely want to wait for at least this area to test and be close to it before we drop down to the trigger. So of course, Jesse chimed in 15-minute, and he is correct. We'll drop down to the 15-minute, and we'll see what's taking place. So right now we're looking at the 15-minute. And let me ask you guys this question. Do we see a 3-wave pullback? Yes or no? I know this was a scalp earlier on the NASDAQ. But yeah, do we see a 3-wave pullback? Yes or no? So Robert said no. Exactly. We don't. We don't see the 3-wave pullback yet. All we see is leg A for now. Leg A. We still need to see a leg B and a leg C. So let's see if that happens. That may happen or it may not happen. Also, remember, guys. Wow. Okay. So typically, we'll see price come, break above this first zone of supply, and then price would go to the second one. The second one is this area of balance or consolidation right here. This whole area right here represents, because we see all these sideways moving candles, this is the second area of supply right here. So let's see what happens. So let me actually remove this line right here. And let's see what happens. So let's move forward. We may not get in. Who knows? So this is leg B. And what we can do is draw in leg C. So boom, boom. And here. Yeah, which reminds me, okay, right here and up here, right? So this would take us to that second zone of supply if price does go there. We may not get price to get up into this area, so we have to be prepared for whatever happens. So let's move forward and let's see what happens. So okay, it looks like price is consolidating, and then we get a break to the downside. So it forms a miniature leg C. You know, this is a leg C, but it forms a miniature one. Now what we need to do is wait for price to retest what? The first area of supply. So right around here is where we're going to look for, is where we're going to look for the sellers to come in at. Right around here. So if you wanted to, you can place your short right here. And you can just simply target the lows if you want. Right around here. So yeah, let's see what happens. So of course, we're in the trade right here. In the trade. And we almost get stopped out. But as you can see, the area holds. That area demand holds. And price eventually hits our target. So yeah, just that simple. But you can see here how this area, this first supply held. Price didn't break and close above it. It pierced it, but it did not close above it. So I know some traders, they have tighter stops, but to me, that's too risky. They have their stop right behind this area. But to me, that's too risky because sometimes you'll get a wick above that high. It's best just to do it above this main high right here. But you can see that, you know, it worked out as planned, and we saw price continue sliding lower. So, you know, if you just repeat the same things over and over again, you'll tend to be right most of the time. You just have to wait for bears, wait for that 3-wave pullback to form. In this case, you know, we do see a C leg form, but the C leg didn't complete or go to the zone that we typically would want to see it go to. It didn't go to the second area of supply, but you know, we did see price reverse from this zone. So from there, once we get the breakdown, we wait for price to retest the first area of supply, and then we get in on that. So yeah, but yeah, that's how you should trade. That's how we trade. I'm not saying that's how you should trade, but that's how we trade. And yeah, it's been Okay.
Yeah, and I was gonna, even add, like I know Melvin mentioned that we normally like to target the second zone after the first zone is touched on our trigger. We like to look for the next zone higher, and in situations where we're selling. So then, even for this case right here, it didn't completely go up to where we would have hoped. This price reversal zone where we see this area, this area of supply, but it did somewhat go up to sort of like where this hesitation, candle is, and what could be hidden structure, as well. So then, after it touched this zone here, we did see it, make attempts to slide lower and fall lower from there. But yeah, I just kind of wanted to point that out. I know it's kind of hard to see, but let me just draw this in. Just this hesitation candle right here.
Hmm.
Oops, right here.
Yeah.
We could see, price did make an attempt in the C leg to come up here, and this could be hidden structure.
Yeah, that could have been the supply.
The second area. So then, of course, this was the first area of supply. It did mitigate this supply. It went up, leg A broke above this first supply zone, and then of course, we saw leg B form, and then the next supply zone was actually this hidden structure where this doji type candle was, where we could see fresh supply come in, and it started tanking from there. So I just kind of wanted to point that out, that sometimes it's hard to see these supply zones.
That's hidden
It's
supply.
it's a hidden supply. Like this was the most visible supply, and would have been the most ideal, easily observable trade outcome. But then we had one right here with this doji, and
Hmm.
then we got this miniature leg C, and it began to
Hmm.
tank from there. So I
Yeah.
just kind of wanted to
Yeah.
point out that.
But what you'll see often is that price will tag that second supply. I mean, you'll see it often, like a good majority of the time. It doesn't happen all the time, but a good majority of the time, you'll see that happen, and then price will
Like,
sell off.
yeah, most of the time.
Yeah, most of the time it'll happen. Like it
Mhm.
doesn't matter what time frame you drop down to. You can scalp on the 5 minute, scalp on the 1 minute, whatever. You'll see that price phenomena happen often. So then it leads us to believe that the markets, they're governed by an algorithm. The market makers have an idea, they have a plan on how they want to add liquidity to the market, and oftentimes you see these patterns play out consistently. So in this case, it did hit this second area supply, and we saw a sell-off. Actually, you know I was moving a little bit too fast, but this is something I want to point out also, because when price made this low, what happened? Well, we see that price encountered some area of hidden structure right here.
Demand.
Hidden demand right here. So then this hidden demand should have told you that, hey, we're going to see a deeper correction. So then from here,
Are we going to see a pullback,
yeah, we're
right?
going to see a pullback right here on a 1 minute, and it's going to be,
You mean 15 minutes?
yeah, we're going to see a maybe like a 50% retracement typically. Whenever you see price hit an area of demand or support, you typically see a nice decent retracement. So then from here we could at least, maybe, if I would have been, if I would have not been in a rush, I would have definitely saw this, and I probably would have placed my trade right around here, right around this area right here. And then as you can see, price did go up there, but it would have given us a better reward to risk. In this case, we would have had a 3.28 reward to risk ratio, which means we would have made more money on this move down. So that's just stuff to pay attention to. Just look left, see if there's areas of demand, areas of supply that price is testing, and then make a decision on what you need to do from there. So we can see here, it's pretty obvious that price actually hit the area, and we saw price slide to the downside. So yeah, but yeah, I'm definitely going to do this more often now, as far as showing you guys how to trade pullbacks on various time frames, because really that's the key. If you learn that, if you learn how to interpret and understand the three wave pullbacks, and how to enter in and how to execute on confirmation, then that's all you really need in order to really be a solid trader. And it doesn't mean you won't have times where you'll make a mistake, and you find yourself losing, because that does happen. But for the most part, you'll typically see this pattern happen often. Three wave pullback, confirmation, look to enter your order around supply and demand on that trigger time frame. So yeah, but all right, yeah, let me just move on. Yeah, let me check the euro CAD and those trades before we close out. I know those are what we tested or looked at before. So we did see price push up a little bit higher. Now price is correcting. So yeah, we'll see the new area of demand now. Well, I'll just keep it as it is. But you know, some people look for this zone right here. But remember, on a 1 hour chart, um, well, I'll still keep it where it is. I'm not going to assume anything because we could be reversing, because this whole move was based on a 1 hour correction. But on the 15-minute, we are approaching an area of demand, and this is the reason why. This is the reason why we're seeing price react to this area right here. We're seeing price react to it. Let me change the color. And yeah, but yeah, I wouldn't get in because the 20 SMA is flattening out. We could still see price push lower and retest the low. So yeah, this is one idea that I may decide to abort. I may decide to abort this Euro CAD idea. But how's the CAD Swiss looking? Let's see how the CAD Swiss is looking. I believe we're right here, CAD Swiss. Okay, so on the 15-minute, we did see price push up to this area. It corrected, and now it's making another attempt to retest this zone of supply right here. So we may want to look for a sell soon. We may, but I'm just gonna play it safe and look for a little bit more clarity, because in either case, I would love to see price. The 20 SMA starting to flat out and turn upwards, looks like. So even on the trigger time frame, I have to see the 20 SMA sloping downwards. If I don't see that, then I'm not going to get in, because we could be seeing a reversal right now where price could be pushing up. It could break to the upside and start correcting to the upside. So, this is the reason why you need, like, I love having stuff like the 20 simple moving average, because to me, the 20 simple moving average acts as a filter. It can keep me out of positions that I would normally get in if I didn't see what was taking place on the 20 simple moving average. So we could see momentum change and switch to the upside. So I'm going to be a little bit cautious on CAD Swiss franc. Let's go to the Euro Yen, see how that's looking, and then we'll call it a day. Okay, so Euro Yen still in the middle of a correction. And it's interesting because it actually pushed a little bit higher. It pushed higher to the average daily range. Well, not exactly. Yeah, it's around the same area. Yeah, it's around the same area it was before, almost. But yeah, we're in the middle of this correction now, so we'll see what happens. But yeah, this is all based on a 1 hour pullback into this area of demand right here. So we'll see. But all right, guys, that's it for today. Thank you guys so much for coming to today's live trading session. We really do appreciate you guys. And as we always say, remember to always count your blessings, not your pips. And we'll definitely see you guys soon. We may open up the war room, the private war room, so you guys can jump into that if you guys want. And we may do some scalping. Who knows? It all depends on what we see, how price is moving. But yeah, that's pretty much it. We'll let you guys know if we do decide to do that. But we hope you have a wonderful rest of your day. And remember to always count your blessings, not your pips. And we will definitely talk to you guys soon. Stay blessed, stay encouraged. And yeah, we'll definitely see you guys soon. All right. Have a wonderful rest of your trading day. All right. Talk to you soon. All right. Bye.